Today is Friday, January 2nd, 2026, and the market is currently open. Strive Inc., trading under the ticker symbol ASST on the NASDAQ, is trading around 76 per share, up approximately 2.7% intraday since the opening bell. This price action comes after an extended period of consolidation as the stock attempts to establish a solid base following a very volatile month of December. At first glance, many investors are simply watching the price flicker on their screens, wondering whether AST is destined to remain stuck below the $1 level. But that surface-level view completely misses the much bigger picture. Beneath the penny stock optics, a far more important narrative is unfolding, one that most of the broader market has yet to fully understand. Right now, the common belief is that Strive is just another struggling small-cap company, weighed down by high interest rates, weak sentiment, and declining retail participation. However, that assumption could not be further from the truth. What is actually happening is a radical structural shift in the company's strategy. Strive is actively transforming itself from a legacy social media and marketing services business into a Bitcoin-focused treasury vehicle. This is not a casual experiment. Management is making an aggressive pivot that closely mirrors some of the most successful corporate treasury strategies we've seen in the digital asset space. Rather than trying to compete in a saturated services market, Strive is positioning itself as a high-beta proxy for Bitcoin, offering public market exposure to the world's largest cryptocurrency. This raises an important question. Why would a company with a market capitalization under $700 million aggressively pursue mergers, raise capital, and accumulate Bitcoin at this scale? The answer is simple. Strive is not trying to build a traditional operating company. Instead, it is building what can best be described as a digital vault with a ticker symbol. Looking at recent price action, ASST has been trading in a tight range between 73 cents and 80 cents over the past several sessions. This type of compression often precedes a major move, either to the upside or the downside. What makes this setup especially interesting is the volume. Average daily trading volume has been hovering between 50 and 60 million shares, which is extremely high for a stock trading under $1. That level of liquidity tells us something important. Larger players are paying attention. Much of this activity appears to be driven by positioning ahead of the January 13th special shareholder meeting, where investors will vote on the proposed merger with Similar Scientific. Institutional activity has quietly become one of the biggest tailwinds for ASST, yet it remains largely overlooked. Recent filings show that firms such as MCAP International and the Healthcare of Ontario Pension Plan Trust Fund have taken significant positions in the stock. When pension funds and large institutions begin accumulating shares of a sub-dollar stock, it usually signals that they see a valuation disconnect that the retail market has not yet priced in. Let me ask you this. Do you think these institutions are making a calculated long-term bet, or are they simply hedging their exposure? Drop your thoughts in the comments, and let us know how many shares of ASST you're holding. Now we need to talk about short interest, because this is where the real tension in the stock begins to surface. According to the latest data, short interest in ASST has surged nearly 30%, with over 114 million shares sold short. That represents roughly 32% of the public float, which is an extremely elevated level. For a stock with rising institutional ownership and a major catalyst on the horizon, this amount of short exposure creates a very unstable setup. The days-to-cover ratio currently sits around 1.2, meaning that if the stock experiences a sharp move higher, short sellers could be forced to cover their positions very quickly. Borrow rates remain relatively stable near 2%, suggesting that while conviction among shorts is high, the supply of borrowable shares has not completely dried up yet. However, one red flag for shorts is the off-exchange short volume, which has frequently exceeded 56%. This indicates that a significant portion of selling pressure is taking place in dark pools rather than on the open market, a sign of quiet positioning rather than public conviction. To understand where ASST could be heading, we need to understand what the company actually is today. Historically, Strive focused on social media marketing and content delivery, but under new leadership, it has evolved into a Bitcoin-first treasury company. The firm currently holds over 7,500 Bitcoin, and the proposed EMR merger is designed to provide steady cash flow from a medical device business that can be used to fund additional Bitcoin acquisitions. This creates a dual-engine model, a stable cash-generating healthcare business on one side and a high-upside, volatile digital asset on the other. This hybrid structure is exactly why the market is struggling to properly value ASST. Is it a healthcare company? Is it a crypto treasury fund? The answer is both, and that ambiguity is one of the main reasons the stock is still trading at just 76 cents, despite the substantial assets on its balance sheet. Recent earnings further highlight this disconnect. While expectations were for modest improvement,